permission, let us dive right in. We got a lot going on. We got the autumn season just started. We got these amazing rate cuts that happened last week. I won't talk about the mayor situation, but we also got the uncertainty of an election upon us. And now we have, of course, our amazing panel of real estate agents and experts to break down the current state of the market. So what's not to like? We got it all. This is our 43rd real estate chat. I can't believe it's been 43, but we've done 43 of these. And this will be recorded, not just by Antonio's AI machine, but also by Zoom. The call will be recorded. We do these periodically, always on a Thursday at 11 a.m. with some of the top New York City real estate agents and experts in New York City. Today, we're going to talk about the state of the New York City real estate market as we head into the fall season, especially given the dramatic rate cuts we got last week. What does it all mean? We're going to discuss that. So about me, my name's Phil. I'll be hosting today. I was a New York City real estate agent for about 20 years, but now I spend my time running Lease Break, which is a marketplace for shorter leases in New York City between 30 days and 12 months. And we have about 4,000 rental listings, and most of these are not, I repeat, are not on StreetEasy. So if this helps you and your clients, awesome. It's a free website, so check it out. With that, let's turn to our market discussion. So last time in June, if you remember when we spoke to this panel, the market, as it was summarized, was one of sluggishness and a difficulty of getting a deal done. Although deals were getting done, but of course, like always, pricing was critical. So where are we now? How would we characterize this upcoming fall market? What are we seeing? How are these rate cuts going to shake things up, and the anticipation of more rate cuts potentially? So let's now turn to the experts and agents. First, we always start with Noah Rosenblatt. He's our resident data expert, and we're always lucky to have him. He's the founder of Urban Digs, and Urban Digs is an incredible data analytics and market insights platform, which many of you on this call and on the panel subscribe to. So we usually start with Noah first, and it looks like he's going to have a graph or two to share with us as well. And he provides, this part of the conversation provides a very good base of data before we turn to the agents. And the agents will be really important today because we got a lot of very recent news, and Noah's information is always a little outdated just by the nature of the way contracts get signed and closings happen in New York City. So, Noah, how are things looking in real estate from a data perspective? Are the rate cuts taking us right back into this real estate nirvana that we're all hoping for? What are you seeing out there?
Well, first off, thank you for having me. Always honored to be amongst this esteemed group of colleagues here. I wouldn't call it nirvana. No, I wouldn't call it nirvana, but we're seeing a very, very nice uptick, which, that's more to say than anything. It's been rough. It has been rough for a couple of years, and we have seen low deal activity for I think it's 25 out of the last 27 months has seen deal activity notably below where it is seasonally supposed to come in. So, we're kind of exhausted. All of us are exhausted. So any relative improvement in deal activity is going to feel, like if you haven't had any food for 5 days and somebody gives you a rich cracker, you're going to be like, oh my God, that's the best cracker I've ever had in my entire life. That's kind of what's going on in Manhattan with deal activity. It's been so slow for so long that we're starting to finally see an uptick in deal activity for the first time. And now the question is, does it sustain itself? Is this the new normal? Does it last, so to speak? And, before I share a couple of charts, I always thought, like a couple of months ago, before this deal activity actually started to come back, because it's recent. It's like since the end of mid-August into September kind of was the pickup I'm talking about. We had a lot of uncertainty. We're saturated with uncertainty in this market. And when you have uncertainty in the market, you tend to have buyers and investors on the sidelines, kind of waiting and pausing and being less aggressive. And that's what causes this, gap between bid and ask. And sometimes sellers just don't hit that bid. That's what causes deal volume to go down. And you think about it, that uncertainty, right? You had interest rate uncertainty. Again, this is 2 months ago. Think back 2 months ago. You had interest rate uncertainty. You had geopolitical uncertainty. You have election uncertainty. Well, over the last, couple of months, that interest rate uncertainty has gone away. like quietly, and whether or not people know this or not, interest rates are at like year and a half lows, not even year lows. We're way back to like early 2023 in terms of interest rates right now. So with that uncertainty fading, I think you have a lot of buyers coming in, stepping back into the market, and that's what we're experiencing right now. You know, in terms of price action, yeah, we had a little pickup in price action, but you know, I don't see any major move higher in price action. I feel like it's still like a 2019 style of a market. And I do have a couple of charts I want to share, and I want to be respectful of everyone's time. So let me just do this really quick and try to get done here in the next couple of minutes because I want to visualize what's going on. This is what I call the listing climate index. It's a wonderful chart. It describes the temperature of the listing environment. The lower those bars go, the more challenging is the listing environment. That blue line there is the challenging listing environment market. And as those bars go higher, it's an easy listing environment. I mean, you can go back to 2013, 2014, and 2015 and see how high they are. And for anyone selling in those markets, that was a crazy, crazy market. Now, I'm going to overlay some colors here because I want you guys to see what I'm talking about, right? You had the golden years of 2013, 2014, and 2015. We had a policy-driven reset in 16, 17, 18, 19. You could see that slow bleed down right over there. We had the pandemic that came right when we were coming out of it in 2019. We started to come back. The pandemic hit and took us there. We had the pandemic recovery, which was kind of crazy, but it was abnormal and temporary. And then we had the rate hike volume trap. And we've kind of been stuck in that. And it looks like, if you just take a look at that last bar, it looks like we're coming out of it. And from everything that I see, you know, I mentioned 25 of the last 27 months had deal activity below seasonality. Well, September, we got a couple days left. September right now is on par to beat seasonality for the first time since March of 2023 and May of 2023. I should say May of 2023. Those were the last times we actually saw deal activity over the average. Since then, it's been below. So this is the first time that we're starting to see it. But the problem is we're coming back from a low, tough level. So like we're coming back to like maybe normal, maybe a little bit low normal, still tough out there, but it's starting to come back. And you know what? Everyone's telling me, you know, if I price right, if I price wrong, bidding wars, right? One of our colleagues can't be here today because he has a bidding war going on out there and he has to deal with his business. Well, we took a look at the data and we looked at quarterly information and we looked at sales data and we're like, well, what about all those deals that were priced right? Right? They were priced right. Like, what was their negotiability? How much did they get of their asking price? That's the green line. And basically, if you price right, if you sell under 60 days on market, you got like a 2%, under a 2% negotiability. So sellers are getting 98.1% of their asking price. But if you price wrong, that's that pinkish, I don't even know what, papaya looking color, right? If you price wrong, you're looking at 9%. Close to 10% in negotiability. So it's a very transactional market, but there's a penalty. There is a harsh penalty that sellers are going to have to endure if they price wrong. Okay. The median's about 4%. That's this blue line right in the middle. So I just want to point out, if you price right, the market will react. If you price wrong, the market will penalize. And I think a lot of sellers really need to know that. Okay. And
hey,
finally,
Noah, can I ask you a quick question? Is the papaya line, does that reflect original asking price or last asking price?
Yeah, great question. I should have clarified. All of this is original. All of this is based on the original asking price. So it's taking into account price reductions from that original asking price and then negotiations from that level. So both of those are in that. And finally, guys, I just want to show you interest rates because this is really interesting. We just had a big cut. You guys notice that mortgage rates actually did not go down with that big cut? They actually went up a little bit from that big cut. And if you wonder why, it's because it was priced in already. And I just want to show you guys, we talk about this on Macro Monday, which is free. All you guys could join on Macro Monday that we do. We are right here, by the way. That's where rates are. Okay, the next meeting is November. There's a 52% chance they're going to cut 50 basis points again. Another 50 basis points on top of what they just cut. And then after that in December, another cut. And then January, another cut, another cut, another cut, another cut. By this time next year, we're supposed to be way down here. So we talk about this just so we have a general idea. Like the Fed looks like it's on a rate cut campaign, and that's going to continue according to market expectations. Doesn't mean it's going to be right, but this is what the market expects. We're going to have significant cuts taking us all the way to June and September of next year.
Awesome. Anyone have any quick questions for Noah while we have him and the charts are up? No? Okay, great. No, that was super, super helpful. Provides a great base for the rest of the conversation. And I'm sure you'll be on the horn in case. So let's now speak to the agents. And first, to get a finger, kind of a finger on the. I also asked everyone to give me a number 1 in 10 strong buyer's market and 10 raging sellers market. It's a way to keep us honest. We kind of from meeting to meeting. First, hear from Naomi. Love to hear from you. Love to see what your thoughts are.
Hey, Phil, is it just me or are you going in and out for everybody?
Oh, man.
No, he was going in and out. Yes.
Really shouldn't be frustrating. Really? Was it just
thank you,
for the whole
Mr.
time?
Lewis.
the whole time or just that one time?
Okay, how
Just
many
that
people thought
one
of hot
time.
dogs? Grazed papaya? Did you? I did. Noah, now
You're
I'm
clear
hungry.
now, Phil.
I did. I want to go
All
get
right,
a hot
good.
dog. Yeah,
I'm good now? Good
You're
now?
good now.
you're good.
You're good. Thanks for that, Brian.
Anyway,
though,
I'm
right?
not sure what you heard, but the idea is we're going now to Naomi and seeing what
Yes.
she thinks about the market. And just don't forget, like I said, rating between 1 and 10, 1 strong buyer's market, 10 strong sellers market. So Naomi, what do you think? What
Well,
are your
I
thoughts?
guess we'll start with that. Definitely between a 5 and a 6. I think it's really relative to the neighborhood, the pricing, the size. So if you price right and this is in any market, as long as you price it right, your apartment will sell. And it's important to know that this is an active city. So yes, we have our ups and downs, but things happen. We're not a complete shutdown. I really enjoyed seeing that amazing Manhattan Climate Index. Wow, Noah, that was like really something I would love to show my clients. And to add it to the uncertainties, I've been having issues when there's financing with local law 11 issues and local law 97, where they want to see if any of the buildings are preparing and starting to send out to their shareholders or their owners in a condo. What are they doing to prepare? Are they doing any assessments to start to prepare for this? So those are the two uncertainties that I'm seeing in the market, where when you go see a building, you love it, everything's great, then the attorney does the due diligence and says, wait a second, there are no reserves for the next local law 11, or there are no reserves for the upcoming local law 97. What's going to happen in the years to come? Is this, is your current common charges or maintenance going to go up double or triple? So I'm seeing that's the problem. And also with banks, they do require more than they ever did regarding local law 11 and the stability of the buildings. So they're requiring an engineer's report almost in every deal I've done that it requires financing. So that's where I'm at right now. And of course, never mind the whole buyer situation. That's like another conversation.
Naomi, could you very, very quickly just describe local law 11, local law 97? Like, what do they have to do with?
Yes, so local law 11 is facade. That has been, it went into law in 1998, so it's been around for a while. Every 5 years, every single building in Manhattan, well, in New York City, gets their facade checked. It was kind of like a no-brainer. It gets done, no problem. But considering what has happened in buildings throughout Manhattan, and also because of what happened in Miami, banks are rethinking, maybe this local law 11 shouldn't be so overlooked so easily when we're lending. And not only that, most buildings that I've seen do not prepare for it. So a lot of times when there is local law 11, there is an extra assessment tagged on to the common charges or maintenance. So this is something a lot of people are looking into. Local law 97 doesn't really take effect until, well, it's in effect, but it's transitioning, but they want to get down the emissions by 2030, which is not that far away. And there are costs involved in converting all these buildings. So another thing that I see, banks and attorneys looking at is, how are you preparing for this? Are you starting an assessment now? Do you have reserves? So that's one of the challenges I'm seeing right now. With the cash buyers, I don't know if they even look at it. I had a few cash buyers that just didn't really care, but I think their attorneys made sure they cared, because a few years down the line, how is this going to affect their monthlies?
Absolutely. And also future buyers that may look at the property, right? And how that could
Correct.
affect things.
100%.
Thank
Hey,
you
does
so
this
much.
mean,
Yeah,
does
Ted.
does this mean that people are going to love walk-ups again because local law 11 doesn't apply to 6 stories or less, we just said? So does that mean there's going to be a wave of walk-up buyers in small buildings?
Interesting. Could be.
Hypothetical.
Something to
You
watch
never
for.
know. I mean, listen,
Hypothetical.
wouldn't you want to be in a building, even if it's only 4 stories high, that it's safe and is not going to crumble? I mean, that's something I would look into, even if I
Exactly.
would,
Imagine there's a wave of people taking out the elevator of the building just so that they could comply with the law. Anyway, all right. Thank you so much, Naomi. Let's now go to Scotty. Scotty, what are you seeing out there, and what number would you give them
Oh
current
boy.
market?
Oh wait, I should put my camera on. Hold on.
Yes, please.
Let me see. Where am I? Oh yes, I'm out here overlooking the earth. It's nice up here. It's a little chilly. Yeah, so it's it's interesting because the stuff has ticked up for sure. I've had some more buyers get a little more encouraged, of course, by the rates and also the potential of rates going down further. I've even read that refis are definitely up a lot also. But a couple of buyers that I had on the sidelines definitely started coming out and started getting excited. Not seeing much in terms of anything outside of the normal seasonal inventory that comes out, after Labor Day. I'm not, I'm seeing like the normal trend of more coming out, but not a huge amount, but definitely more buyers. And I don't think sellers have, at least in my, in the buyers that I'm working with, I'm not seeing a lot of sale prices come down. There is more negotiability when you actually pick up the phone and talk to an agent. They definitely talk about negotiability. But the prices aren't necessarily coming down drastically in any way. But, I deal with like, we're talking about under 2 million. So it's a little bit different. I'm not doing the $15 million lofts that Brian Lewis is doing all the time. Shout out to you, Brian.
I wish, right? I wish.
But it's so I feel like I'm out of 5 here. I feel like we're out of 5. I mean, it's busier. I am out there more. I'm making more appointments. Starting to get more deals again. The summer was really slow for me. And yeah, people are starting to, they're getting a little bit, there's that existential crisis with the election and everything that I think is making people feel, a little bit uneasy, which is typical. It happens every 4 years regardless. It's going to be interesting because I think this fall is going to be pretty good, but I think before we know it, we're going to be at Christmas. And then I think with another rate cut and maybe a little bit more stability, I think next spring could be amazing. And that's what I'm hoping, because I think more sellers will then be able to start putting their apartments on the market finally, because now they can go into something else with a rate that's a little bit better. And we can almost get back to like a normal year of doing real estate in New York, because the last 4 have been a little bit rocky.
Scotty, thanks so much for that. One quick follow-up before we get to Fred is, any thoughts on the rental market? I know you often comment on the rental market and you do some business down there. What are you seeing?
Yeah. I've been doing a lot of rentals from Upper East Side to Tribeca. Yeah, they are. They're still going really well. To find a rental in, downtown West Village, Tribeca, I'm working on both sides of it, and it's still really, really pricey, still really difficult. The townhouse that I just rented for 28 was, again, it was like another bidding war. It was crazy. More people just like, had to have it. And there was a lot more traffic than I had with that than I had with an Upper East Side 3-bedroom that was a third of the price. So I think that's just probably typical, but it's been very active on the high end for sure. But the way the rental prices have been for just like a standard nice 2-bedroom, 2-bath, let's say under 10, the way that price has shot up and has stayed up there, at least for the clients that I've been dealing with, has been pretty remarkable.
Yeah. Thanks, Scotty. All right, Fred, Mr. Red Shirt, what do you got for us? What are your thoughts on the market?
So let me start by saying that, I mean, I was just thinking, I'll start by saying I'm having a lot of fun in my new job as a real estate agent. It's a lot more fun than running a company. And I will then say that I would definitely give the market a 5. And the way I characterize this market, and I've written about this a certain amount, is that I like to call it a broker's market. I don't think it's a buyer's market. I don't think it's a seller's market. It's a market in which you need a good agent on either side of the transaction in order to get it done, because the expectations of both the seller and the buyer tend to be misaligned. And unless you have strong people on either side, it's really hard to pull something together, because this really is one of those markets in which you've made the appropriate deal if both sides are equally unhappy with the result. And so as far as what's going on in the market, kind of segment by segment, it's busy at the high end in the sales market. I mean, I totally agree with Scotty about the rental market, that one of my agents put I have to get out of the habit of saying my agents. One of my agents put something on the market in Tribeca, about 2,500 feet. But windows front and back, no side windows. So it was in theory a 1-bedroom with a lot of, quote, ancillary spaces, unquote. Put it on for 18.5 on Monday, had 23 showings on Monday, and it was rented for over the 18.5 ask by Tuesday. Would that we were seeing more of that in the sales market. But I think that if you look at the Olshan report, June was pretty busy with 4 million and up contracts. July slowed down, August slowed down, though at least in our office, August was also pretty busy on lower priced stuff. August was actually a surprisingly busy month over the arc, given the historic notion that everybody's gone to the country. Well, guess what? Everybody has not gone to the country. But September in Olshan has been really strong. And we've been seeing that just anecdotally within the office too, but it's all price related. At the end of the day, I'm just echoing what everybody else says. It's all price related. If you got it priced right, then you don't have to face the papaya line, and once you're stuck in the papaya line, it's not only a question of 9% or 10% below the ask, it's also a question of time on the market. That You know, those papaya apartments, a lot of them celebrate an anniversary. You know, as agents, the last thing we want is a listing with an anniversary. So the key notion, you know, the biggest negotiation I feel brokers face these days is the negotiation with the seller about getting the price right out of the starting gate.
Thanks, Fred. Great thoughts. Let's move on now to Caroline Bass, my bestie from all the way back to the City Habitat days. So Caroline, what do you got for us?
Hi, thank you so much. I think it's a 5 as well. Although there is a lot of activity, and I'm seeing, I really have just saw this in the past couple of weeks. I have a listing that actually Scott Harris showed on Central Park West at the Beresford, Central Park West and 81st Street. I showed that apartment 67 times because I send these weekly reports, so I know how many people have come to see it. I showed that apartment to 67 different people over the last 160 days. And just this past week, we ended up with multiple offers on it. And that's priced, it was a 2-bedroom, 2.5 bath, priced at $275. So, I mean, it did not go, you know, we're at contract, we're not at asking, but there was a lot of activity. And then on the buy side, I've got buyers that we were at open houses last weekend, and 3 of the 7 apartments that we looked at, I followed up on Monday with the brokers and said, what's going on? What's the motivation? And they're like, we have an offer at ask. We have a full cash, all cash offer. I wasn't blown away. There was a lot of people in the apartments with us at the open houses. So I'm seeing a lot of activity. And I have another buyer that just missed out on a bidding war. And it's like, I don't know if it's this mentality of, okay, I missed out on something else, and now I've changed that motivation. I have some other buyers who have been casually looking, who just got their rent increase. It was 20% higher than what they're paying. And they're, you know, paying tens of thousands of dollars on their rent. And they said, this is crazy. We're buying now. And all of a sudden, so every day this week, we've been out looking 2 or 3 apartments every day because their lease is coming up and they don't want to extend. And they feel like the rent increases are somewhat egregious based on the amount that they already pay. So I don't know, lots of factors, but I mean, I'm happy to see the activity back.
Can I ask a question, Caroline?
Yeah,
can I ask
please,
a quick question?
Yeah.
What were the price points of all that when you were calling and they're saying the offers and multiple bids, and what price points, if you don't mind, in neighborhoods?
I don't mind. Most of my stuff is Upper East, Upper West for the majority. So client that lost out on a bidding war was between 2.5 and 3.5 million. Another client that lost out on a bidding war was below $1 million. It was 1-bedroom, Upper West, from like, we're looking from like 700 to like 900. And then these other people that just are being propelled back into the market is Upper West, 2 to 3 bedrooms up to about 3 million.
Cool.
And the other one was a bidding war, 800,000, 1-bedroom. We ended up, my client got, we ended up getting it for $831,000, $42,000 over the asking price. But, you know.
Caroline, one last question. Sorry to hog this, guys. Your Beresford, congrats, by the way. That's huge and that's amazing. I love the building. Was the result of the activity at the end that got you through the finish line the result of a price drop? That 120 days, you stayed the same price the whole time?
No, we changed the price once. We changed the price once from 3 million down, or 2,999 down to 275. So we were at 275 and nothing. And you know what? The people that came back to, actually, Two of the people that came back were not new. They were people that saw it in the spring. I don't know. So circumstances changed and they decided.
That's super interesting, Seabass. That's really, so that they kept it on the radar.
Yeah.
Congrats again.
It's a good apartment. Here's the thing. It needed work. As so many, we all know there's so many estate sales out there, and Central Park West seems to be littered with apartments that are either super high-end redone or need a total gut. And those that need the gut are a harder sell. And I think sometimes it takes people understanding the market a bit more before they come back to that, especially if they saw that at the beginning of their search. That's my thought. I don't know, but.
And if I could just throw in a comment on top of what Tracie was saying, I think the reality is, again, especially in the bigger market, the tax bite has become so enormous that between the tax bite and the fact that you were going to move to something in which your 2.5-point mortgage was going to be a 6.5-point mortgage, people with big apartments all over town are just staying in them. They've decided that it's cheaper to die there when they hopefully get the step up in basis. And yeah, I mean, I'm an old man. I've made that decision about my apartment on Central Park West. I'm leaving there feet first, because by the time I pay the taxes, I can't afford anything as nice.
Great.
Can I be your agent, Fred?
If I were going to pick anybody, Bri, it would be you. But you'll have. But
that would be the saddest day. That would be the saddest day. Anyway, let's not even think about it. Not even gonna think about it. But
oh my gosh, you guys are too funny.
I'll have to fight Lisa Chaget for that.
All right, so Caroline, thank you. By the way, that question that Brian asked you about the pricing at the Beresford was my exact question I was going to ask. So thank you, Brian. Great minds think alike. Let's get to Brian Morgan. Would love to hear what you think about the market. Another friend of mine from the City Habitat days. What's going on?
Old school. Well, thank you for having me, Phil. So this is my second time on the show. So I got to ask about this rating system. I think Frederick brought up a good point. Like, what are we rating based on? So yeah, I would agree with him that from a broker's perspective, things are much, much better. Like, I would almost give it like an 8 or even a 9. And that sounds crazy, especially I was rating it a 5 last time I was here. And that's
so
obviously.
I'll explain it. So the idea,
yeah.
So the reason why Fred's probably putting it as a 5 is he's basically saying it's kind of like a tough market. So a number 1 is like, imagine a raging buyer's market, right? Like just raging, where like buyers have all the leverage. That's the idea. They have all the leverage, right? Think like 2008 financial crash. That's kind of 1. And then a 10 is a raging seller's market, where you put it out, it goes, and there's about 1,000 bids on it, so that's the idea. So the reason why a lot of these people, like, Fred's saying, oh, it's like a broker's market, he's saying 5, is because it's tough to get the deal done, right? It could kind of go, they need some help, you know what I mean? It's like right in the middle there. So that's the idea of the 1 buyer's market, 10 raging sellers market. Is that clear?
Yeah, that's clear. So if I guess that's the case, I'll inch it. I gave it a 5 last time, so I'm going to give it a 6.5. And the reason for that is because we are seeing so much more contract activity right now than we've seen in a long, long time. Last year at this time, we had nothing going on. I mean, we have short memories. Last September was crickets. There was nothing happening. It was dead. Compared to where we were then, if you look at Noah's chart, we are on 10-year highs, aside from 21, in contract activity for September. That's the pace we're on. 10-year highs after being on 10-year lows last year. So like, there's just a dramatic change that's happened there. Now, I'm not saying that, sellers are in this great position or anything like that. I think finally, like, people are interacting and deals are getting done. I don't think prices are going up by any means, by any kind of metric that we can look at that's something historically great. But I do think that things are happening in this marketplace where they weren't before. And as Frederick said, again, like, brokers got to be happy, because last year we were not, because it was dead. And then I know there was a point that was brought up before about like the higher end stuff. It really depends, I think. Co-op condo, the co-ops from what I'm seeing are taking a long time for a lot of these apartments to sell. They're not moving right away. So Caroline brought up the point that renovated apartments are easier to move. That is 100% true. Even if you have a dated apartment, what I'm finding is that people, they want to do this, they want to do that. People want it to be modern. And that means like the last 3-4 years. If you didn't renovate in the last, probably, I'll give it 5 years, then it's almost not a renovation anymore. That's how dated everything, that's how quick everything gets dated. So, I don't
And
know.
realistically, Brian, that's every co-op with almost no exceptions.
Yeah, so you're getting people walking through these listings and they're like, I want to do this, I want to do that, I want to do the other thing. And it's like, nah, I don't want to do any of that. I'm going to wait for something that's done. And it's like, well, okay, that I get it. I understand. I wouldn't want to go through the Department of Buildings either. So I don't blame them. But at the same time, like, what do you expect? Do you expect to get it to look like a new dev condo? I mean, the chances of that are minimal. So we'll have to see where these buyers end. Maybe they wind up ending up in a condo after all. They think they're going to get a better deal on a co-op. They can't find what they want. And then they wind up going condo. Because I think at the end of the day, those are the finishes they're looking for. And they're having a tough time getting them when they look at these co-ops on Central Park West or Fifth Avenue or Park, whatever you.
I have a client, Brian, and we have a code word when we're in one of those buildings. Like he wants that look like fake pre-war Robert Stern, like the nouveau pre-war, but he doesn't want to pay for it.
Right.
So whenever we're in our building and we get a vibe that it's just like, creaky and old, he's like, smells like soup. So he goes in a building, he's like, building smells like soup.
Yeah, there's a lot of soup out there.
There's a lot of soup.
A lot of soup. And you know what? In the stew, in most of these situations, you have to put in, brand new AC. So like if you want HVAC, which a lot of these co-ops don't have and a lot of people want, that in itself is just such an undertaking to do, besides the rest of the renovation. So then I feel like these people, I don't know where they're going to wind up, but I feel like they're just going to wind up packing a condo and paying more because they can afford it. Because they don't want to go through the work. And I don't blame them. If they can afford it, why would you want that headache?
Don't you think the value, though, is finding a classic building, if you like it, and creating, it's a pain in the ass, creating your own. I think that's a value play. That's what I did. And that's 12 years ago. I need to redo things. But I think there's tremendous value. And I do think the pre-war addresses have the best locations because they got there first.
I agree with you. I think it is a value play, but not from a life perspective. So these people that have gobs and gobs of money, it's just not worth it unless you're retired and you have time and you want to do a project. It's just,
or unless you have a 20-year play or your kids are young and they're going to be here for 13 years plus college. That's your generational move. And then you're Fred Peters at the end of that, right? And you're like, I'm just going to stay.
I was just going to say, and then after 20 years, you think it's too much of a pain in the ass to do anything about it. So you're just staying there.
Well, Frederick, you are part of the rest of the boomers out there. They're never moving.
Yeah, well, I'm definitely a boomer. No two ways about that.
Yeah, I just want to add to what Brian Morgan said about the, the new development condos. That one of the, the HVACs, I had a co-op that was amazing, and everyone asked me the same questions. Can I put the HVACs in? Because people are looking into the future about the change that's going to happen with this local law 97. It's going to happen, and it's going to be a big expense. So yes, new development's more expensive, everything's more expensive, but down the line, they're not going to have to switch anything. It's already done. So they have the apartment look that they want. They have all the, the high tech or to clean energy already installed. They don't really have to worry about local law 11 because it's a brand new construction. So all the new laws are already in place. So it does give peace of mind for the future. Maybe I'm paying more now, but I'm not going to get a $10,000 assessment down, in a few years.
Well,
Naomi,
but I got a question for Naomi.
Sure of that.
She seems to know a lot about this. I think we can all be educated more on this local law 97. I certainly don't, I know what it is, but I don't know enough about it and how it's going to impact buildings in terms of fines and what we can expect in terms of assessments. If anybody knows anything more about that, if Naomi knows more, I'd like to hear more, because, you know, I think it should factor into decisions people are making.
Right, and that's why I think in the last few months, we've seen, you know, new developments soar. You know, even though it's much more expensive to get in, but down the line, so local law 97 is basically all these older buildings are going to have to be upgraded to, you know, 2030 standards, and that's going to be really expensive. You know,
Like,
they
what are
want
we
to get,
talking? Like, how expensive? Like, are there projections out there of what these buildings? Does
well, it
anybody
depends on the building. It really depends on the
like
building.
these
you know.
the older pre-war co-ops?
Well,
Like, what
you know, those
Brian, the issue
grading,
is that they're going to have to convert most of them from oil heat to a more energy
Efficient, right.
efficient kind of heat. And that requires an enormous amount of retrofitting.
That is correct.
So is natural gas an option?
Brian, one thing I'm thinking, you're giving me an idea, is maybe we get an expert on here.
Yeah.
And for one of our next calls, perhaps we could have an expert, and maybe for the first 20 minutes or so, we could ask all our questions, because I don't know if we're all experts on it, and so it might be helpful for
Definitely
everybody.
not.
I think it's a great idea.
Yeah, me too.
Yeah. So
I mean, but
good.
you do see the ratings on each buildings, like, you know, you have D buildings, A buildings.
I
all
feel like they're all
buildings,
Ds.
A lot of them are D, so that's a really big
I
exclamation point.
Can I just jump in though and say one thing? And this is a bit of a rebuttal from somebody who is a pre-war guy. I have sold plenty of new dev over the last decade, and there has barely been a building in which there wasn't some kind of major issue. The air exchange at 15 Central Park West, the freaking plumbing problems at 432 Park. There's been one after another in which, in theory, you're not going to have to do anything for the next 10 years. But in practice, everybody I sold to at 432 Park had a flood. Literally everybody, because the plumbing was so crummy. And so they've had huge additional expenses trying to fix construction related problems. It's just not true that buys you a free pass.
It's true. And I'll add to that, because I'm involved in a situation right now. I will not mention the building, but there is a very new building that has a distinct odor in the building, and they think it's an engineering problem, and they're going to have to go after the sponsor probably at some point, and it's going to get ugly. And it's sad, because these people just bought in a brand new building, and this is what they're living with. The doormen can't even get through the day because it's so bad.
Wow.
I haven't smelled it personally. I just heard, but this is what goes
all right,
on,
guys,
I guess.
let's move on. We have 4 more people, and I want to make sure we have time to get to them. But good discussion. We'll have an expert on here to discuss this in the future. I think it'll be really helpful. So thank you very much. I think that was Brian who last spoke. So let's go to the other Brian, Brian
Hey, guys.
Lewis. Brian Lewis, what do you got for us? What's your number? What are you seeing out there?
Okay, my number is a 6. Okay. My number's a 6. I think it's an uneven market. I'm getting weird offers. People are like, hey, here's a great cash offer. My seller likes it. And they go, oh, by the way, we were at your I was at your open house. The buyers have never been here. You ever get those? Buyers never been in the building, never been in the apartment. She told me that today. And I was like, wait, what? My notes say that they were. So we haven't accepted offer, but they're going to fly in Monday and see. And I said to the broker, is anything normal anymore? Is anything just normal deal? And she said, we're all just trying to make something out of thin air. And I thought that was interesting. She told me that this morning, and I think there's something to it. I'm finding that 2 million and below are more busy. It's more busy. It's busier. The reason I was asking you, Caroline, about the price is because I'm not seeing as much close to 3, 4, 5. I'm getting people to see them. They're not engaging. And some of these, you know, it's all price. We always say that, but literally you can demonstrate value with the price of the home. Like literally it's priced in. I don't know what more blood they want. And so it's surprising. I've got a loft downtown, fully ignored, 5E 17th. Don't know why. Could it be price? Maybe. It's 6,000 square feet. Usually it's quite popular. It's crickets right now. So we're getting it done. We've had multiple bids on a few things. Everything's a little weird, but we're making it happen. So I'm giving it more optimistically the 6. I wrote a few notes here and I'll be fast because we have 3 other people here. Buildings that plan for local law 97. I've got one right now and I'm marketing with it, Brian, and I'm not going to go deep into 97 because Phil's going to do a whole segment on it. But I literally educate brokers when they come to the listing, 41 West 96. They not only have planned it, they have all of it budgeted out. They know it's going to be finished. They're going to be finished and done and dusted in a year. The assessment's going to be $65,000 for my sellers, and they're prepaying that for the buyer. So I'm presenting the opportunity and the solution at the showing. So that's helping. And that building's way ahead of its time. I think that's amazing. Weird Deals covered that. How smart were the buyers that bought in the past 2 years, right? Now they're refining. Those were the pioneers. I'm calling and emailing a few of them and I'm go, there you go, right? That's what we talked about. I think that's kind of interesting. Who's going to be mayor? Huh? That's happening. The quality of buyers. I heard a broker confide in me, a broker who does Upper East, and Upper West. She said, you know, they talk about all the buyers leaving and going to Florida and all that tired old story. They talk about some people coming back, and we tell them there are new people that come to New York too, right? That story's not being told. But she said, are you seeing a different quality of buyer? Like a lesser, I mean, there's wealth in New York, let's face it. But she said your day-to-day $2 to $3 million, do I dare say family home? I'm amongst friends here. I would never market like that, but you know what I'm talking about. A stretch out home that's like 3 bedrooms. Are you seeing lesser quality buyers? And I had to think about that. I'm not talking about the people. People are fine. The money. And I thought, in some instances I am. And I just wanted to put that to the group. Are you seeing, financially speaking, less quality?
You mean less qualified, Brian, or what do you mean
Qualified
exactly?
and like different than it was, call it 5 years ago. Like, are you seeing it like, well, is this board really going to take like the type of people that are buying in? Are we getting a maybe less wealthy buyer pool for the day-to-day New Yorker apartments, the people who live and work here? I had never really thought about it because we're so busy in it. And I'm like, oh, maybe, or maybe it's just her and me. And I can't read my own writing. Oh, SALT tax deduction. So does anybody know, and I'm asking naively, is Kamala Harris saying that she's going to get rid of it? Does anyone know? Because I want it gone.
I know, having spoken to this is Scott Harris from Brown Harris.
Hi, Scott.
I've spoken to a few members of Congress on the Democratic side of the aisle. They're talking about it. I don't know that there's anything, it's going to have to kind of come through the House and so forth, come through Congress. So
But it can be done by the president with a pen. And I know Trump put it in.
It's definitely in discussion. That's for sure.
Trump said, and I'm not endorsing that, trust me. But he said he's now saying he's cutting it out. He's going to get rid of his own thing that he put in. Found that interesting, and I didn't know if the Democrats had put that on the platform. They should.
I've heard discussions about them raising it from 10,000 to, whatever amount that's a little more reasonable versus getting rid of it altogether. But I do hope they get rid of it altogether personally.
Yeah, it'd be nice. Anyway, that's what I got. 6. I've got a lot of things to sell. Yeah.
Yes. Thank you, Brian. As always, just want to try to get the last 3 in. We still have plenty of time, but let's move to Tracie. Tracie from Miami, or maybe she's in New York City now. I'm not so sure.
I'm in New York and I'm
Tracie, what do
so
you got?
sorry I can't show my face, but hello everyone. It's so great to see you. And it is true. I feel like almost every road has led from city habitats. It's great to see a lot of my peeps from back in the day there. And Fred, welcome back to the agent pool. Always awesome to have you and your input. So as always, I learn things from you guys, and not to be a total Brian Lewis copycat, although of course, don't we all want to be him when we grow up? I also say a 6. I think it definitely, you know, I think for some of the sellers who are being selective and holding back their inventory, that there could be the potential for a swing to the seller's market. But in general, I'm still seeing a lot more negotiability for buyers, although it was encouraging to hear about our colleagues' bidding war this morning. I've been working with a lot of new dev buyers lately, and definitely we're seeing, you know, there's all kinds, right? When you ask, is the price negotiable, what kind of concessions, et cetera. Some of the different development sales agents will play it a little coy, but in the last, certainly this year, and even just as recently as last night, they're saying, yes, please make an offer. Yes, we can, you know, we want to maybe preserve the asking price, but we'll do a lot of concessions on the back end. And there are still decorator credits and things like that. So I think there are still the bargains to be had in the new dev. I do actually think that co-ops are going to have their day once again, despite having to do some work, just because there are, you know, sheer numbers factoring there. On the rental market, I also am seeing that even though we're out of the traditional, now that we are in fall, which is crazy, but we have made it to fall, we are seeing it's, I think, still stronger than I've seen rental market, rental increases at this time of year. And hopefully this will maybe drive some more would-be renters to the buying side of things. And then, because you did give me that platform, Phil, I might be located in New York, but I was in Miami as recently as yesterday morning. Glad to have gotten out ahead of the storm, and praying for everyone in Florida or even Atlanta in the path of storm/hurricane Helene. But things are finally starting to pick up there as well. There's been a real difference in the South Florida market, both on the sales and the seasonal rental side of things compared to the previous 3 years. But I do think the fact that we've had this interest rate decrease for the first time since March of 2020, that is making a difference across all markets. So happy to talk to anyone interested in South Florida. But Noah, I just really want to thank you, and I pray that you are prophetic and correct about, I was loving what we were saying about the continued trend of rate decreases from the Fed. So if that is God's gospel truth, I think that that's positive for everyone all around. But I'm still at my 6 to wrap it up. Thanks, guys.
Tracie. And yeah, if Noah says it, it's going to happen. So that's
there it
just
is.
one thing to keep in mind. So thanks so much, Tracie. Now, Nikki, you still with us? I just see your profile picture there. I assume you're still with us. Great. So what are you seeing out there?
Yeah, so I will not echo what everybody else said. I'm a 5. A couple of things on the pricing perspective. The biggest obstacle are co-op boards and their lack of realism when something needs a complete gut. I spent probably about 2 weeks, a couple of weeks ago, calling about 50 different brokers and hearing the wide gulfs between what was reported as the closing price and the actual price. It's sheer madness. And Naomi was talking earlier about the issues with finance deals. I have actually been asking those questions before I make the appointments, because if there is a high likelihood that there will be substantial assessments in the next 3 to 5 years in a building, a lot of my buyers are completely sidestepping those buildings. So that's it in a nutshell.
Nikki, when you said there's a difference in the real price of co-ops versus what you're hearing, you're referring to how they do that trickery behind the scenes, right?
Yeah, all of the concessions.
Yes.
And adjustments and credits and this and that, and it's just it's madness.
Yeah, a lot of that.
And if I can just say something, I devoted a lot of time last year to trying to get through the real estate board some kind of action from the Department of State on this issue of how prices are being falsified to satisfy boards, primarily because it distorts the record. You know, we depend on these prices for appraisals, for our own market evaluations. So when they're all inaccurate, it just puts us at sea in terms of what things are actually worth. And the long and the short of it was that Albany was not interested in taking this on.
It feels like it should be illegal. I mean, you should report what the real sale price was. I mean,
It's
I just feel,
fraud.
you know,
It's
It
called
is
mafia
absolutely
feels-
capitalism.
It
It's a
feels
mafia.
like it will be one of the next big things that happens as we're getting out of all of this stuff that we're in. Because when you're trying to explain to a buyer that something that has a price of 1.8 actually closed for 1.4,
right.
I mean, that's lunacy.
It's crazy. It makes no sense. It's so hurtful to the market, I think, like Fred said. Okay, thank you so much, Nikki. Last but certainly not least, I always have to mention Scott was one of the ones back in the day that called the bottom of the market on this very panel. And everyone who listened to him probably made a lot of money. Anyway, Scott Harris, what do you have for us? Good to see you, buddy.
Good to be back, Phil. I actually also thought we were at the bottom of this current little market about 4 months ago. And while I haven't seen prices really start to rebound, I'm going to join Brian and Tracie and give this a 6. It has been easier to get deals done as of late. And we've seen buyers start to succumb. You know, they're working through their own issues to sort of let go and let these deals proceed. So we're seeing a lot more deals come together, as everybody is. What I would say is, you know, some of the indications, again, a lot of these are just anecdotes that we're sharing, right? But properties we took off the market because we needed to regroup and say, all right, we're going to probably launch in the fall. Let's see what's going on. We've sold a number of them off market because there hasn't been enough inventory. And that's a sign of buyers who just want to get to it and they're excited and they want to move forward. So, you know, that's a really great sign. The other thing I would say, just to speak to what Brian was saying about unqualified, qualified buyers, and also to touch base on, you know, kind of this notion of people not wanting to do work. We had a buyer recently who said, I'm going to buy a brownstone in Brooklyn and I'm taking a private equity approach. Now, what she meant to, I think what she meant to say is she's really going to study the numbers and try to be thoughtful to it. Of course, her emotions got the better of her, and she's buying something she loves. So that's, but the notion of taking a private equity approach kind of speaks to this idea about doing work, not doing work. I see my clients as either having like a hedge fund mindset or a private equity mindset. Somebody who wants to add value over a long time. Those are the private equity people. The hedge fund people are the people who are worried about what if I have to sell tomorrow? And those are the people that are going to be more likely to want to buy renovated property. And so that's a good way to kind of think. You have to know your buyers. Agents got to know their buyers, right? And buyers hopefully get to know themselves a little bit. You can't get somebody who has a hedge fund mindset to want to dive into a big project, whatever age they are. But to speak to like the quality or the qualifications of buyers, I think the really smart money started taking action over the last 2 years. Lots of people who were cash or who were going to refi. Okay. The smart money took action a while ago. What we're seeing now is people who are not following the crowd, who think they're smart money, but maybe aren't as smart, but they're taking action. And some of them are maybe less qualified. But I think what comes right behind this is just the herd, where everybody's excited about where rates are. And the word's really getting out. So, you know, I'm giving this a 6, but it's really like deals, you know, we're going to start to see the same things that happen all the time. Sellers are going to get overeager. Buyers are going to be a little bit less crazy about the lowball offers they're making. But I think it's just a return to health. And I think it's a really great sign. So we're like super encouraged and really grateful to have this market that where prices haven't caught up yet to the enthusiasm of buyers. You know, all of a sudden there's sales volume, but the prices are, you know, they're going to lag. That's just normal. I'm sure that Noah's going to show that, but overall, I think it's just a good sign. We're going to have more inventory soon, a lot of buyer activity, and just a healthier market.
Hey, Scott, can I ask you 2 questions?
Sure.
My first question. So you have the VC buyer, you have the hedge fund buyer. Whatever happened to the idea of buying something because you want to live there?
Yeah, what I would say to that is this is the mindset. Once you kind of move underneath it, Fred, I think it really is. This is just a way of a framework for people to look through. Ultimately, they're going to make these decisions based on what they love, but they've got to give themselves this practical framework to look through.
Yeah.
I mean, how many people, you've got a couple, somebody's in finance, the other person's not, and like the person who's in finance is trying to use this framework. The other person is ultimately going to win.
And
so I agree with you completely, but yes.
And I think you're right, though my observation, which with a Metro card will get you on the bus, is that it's actually all bullshit. And those finance guys are trying to pretend they have a kind of insight into this. But to your other point, and this is my other question for you, don't you find that those are the guys who always say, in my experience, finance people will always tell you that the market is going to go down in 6 months and they're going to buy then. And then when 6 months pass, if the market goes down, they're all too scared to buy because they talk like they're eagles, but they're actually bunnies.
I'm going to let you said it all. I'm not going to, not going to comment on it. But I do think that people are trying very hard to predict things, and people are mostly not good at predicting things. They need to find something that they love and do the best they can.
Can I also comment on that super quickly? Because I think it's important. And I know all of us panelists know this. All these analysis by these finance people and everybody we're talking about, they don't know the micro neighborhoods that we know, all the markets that we have, all of the super specific markets are totally different. So taking the data over whatever New York City is doing writ large has nothing to do with Perry Street in the West Village or Park and, I don't know, 70th, whatever. All these specific micro neighborhoods are their own completely different markets in the same way that certain blocks in Brooklyn Heights and Carroll Gardens are. So they try to take this data, use it against you to try to drive down prices of certain apartments in areas that it doesn't even make sense and will never work. So I know we all know this, but it's important to note that all of these markets are totally different.
Awesome. Thanks, Scotty. So any other questions before I ask Antonio's AI to say a few words? Just kidding. No, and does anyone have any thoughts or questions or anything?
Can I just one little about local law 11 or local law 97? When I first started hearing about this, asked a bunch of board members that I knew in different buildings. Either they were my clients or people that I knew just from doing deals there. And I asked them what they were doing, Brian, Morgan, just to answer that. And all of them, this was about a year ago, were doing energy audits. They were doing, they had like 2 different audits that they were doing so that they could be prepared in the future of what would be coming. And most of the buildings that I talked to with the board members, they got figures in millions or multi-million, like $1 million or multi-million dollars in order to retrofit, as Peter was saying, Frederick Peters, excuse me. And the other thing that I said to them was, well, are you going to do the work? I mean, this is a lot of money. Like, are you going to be doing, what's the plan? And they said they were going to take the fines and for a while. And they were hoping that, and again, this could have changed, but as of then, they were hoping that some more laws would change regarding this local law 97. And so we'll see what happens. But I mean, the big metric, I think, is 2030. They have to meet certain criteria by 2025, and then another grouping of efficiency by 2030. So I don't know. I don't know what's going to happen with this, but it's a serious thing. And I agree. It would be great to have an expert on who knows a lot more about it. But if you guys know people on boards and buildings, I would encourage you to ask them and ask them what their plans are, because the boards are aware of it and they know about it and they're getting audits.
Caroline, on that point, if anyone happens to know a real expert on this, reach out to me. I'll try to do my own research on it as well. But if you do know somebody that's willing to speak in front of the most brilliant minds in New York City, which I'm sure most people would do, please let me know. With that, though, it is after 12. Any final comments or questions? I hate when someone's about to say something and they don't get a chance. They don't want to say